Okay, hi everybody. So hello, good evening and welcome, and thank you for joining us this evening for this great discussion, I hope, about the regulatory landscape for Web3 and digital assets, a global perspective and also a GCC perspective. So in an era defined by technological innovation, digital assets and Web3 technology, the landscape of finance and business is rapidly evolving. And it's a landscape where decentralized platforms, blockchain technology, non-fungible tokens, NFTs, and decentralized finance, DeFi, are shaping the future. But within this world of innovation, the role of regulation is also pivotal. So our discussion today centers on two critical aspects: the global regulatory environment for Web3 and digital assets, and the specific perspective of the GCC, that's the Gulf Cooperation Council countries, which includes Saudi Arabia, UAE, Kuwait, Qatar, Bahrain, and Oman. So on a global scale, regulations for digital assets and Web3 technologies have become increasingly complex and diverse. Different regions are coming up with their own approaches to address opportunities and challenges presented by these technologies. From the US to Europe, Asia, and beyond, the regulatory landscape is evolving and seeking to provide clarity, protect consumers, and support innovation. Query how much that is actually happening. But in the GCC, there's a unique perspective, and these nations are at the crossroads of embracing Web3 and digital assets while ensuring they align with their own economic and cultural contexts. So the regulatory frameworks developed here have had the potential to influence not only the GCC region, but also global trends in digital asset adoption. I'm Julia Charlton. I think I know most of you. I'm a lawyer. I'm a partner of Charlton's and chair of the Commonwealth Chamber of Commerce in Hong Kong. I'm incredibly excited to introduce Patricia. She's General Counsel of Hong Kong's leading Web3 startup, or I might say scale-up, Scroll, and genuinely a really world-class Web3 startup or a scale-up. It's a blockchain project which is focused on scaling Ethereum. And before taking on this exciting role at Scroll, Patricia has experience in some fantastic roles in blockchain, fintech, banking, capital markets. She's got vast experience, which ranges from OKX, a global crypto exchange, to WeLab, a fintech platform, and more traditional roles at HSBC and the Magic Circle law firm Linklaters. So I think we're actually extremely privileged to have Patricia with us here this evening, and she's going to share insights into the regulatory developments in Web3, blockchain, and open source technology impacting digital asset businesses globally. So over to you, Patricia.
Thank you for the introduction, Julia, and thank you, Jay, for your excellent presentation. That was quite an education for me on GCC, actually. And hi, everyone. Thank you for spending your Tuesday evening with us. Yeah. So it's a pleasure to be here, and maybe I can spend the next 15 minutes just sharing some of my insights and experience in this area with all of you. And before I do that, I just want to do some level setting here. So how many of you guys are lawyers? Okay. How many of you guys are in the Web3 crypto space? Okay. All right. Yeah, I see a ex-regulator in the room, so I'm always going to be careful what I say. So we'll keep this casual. I want to share, just some thoughts. Don't make it too difficult. If you don't understand anything, stop me. Okay. So I'm going to skip over some of these slides, but just to set some context, right? Whether you're in crypto or not in crypto, you probably know there were a lot of issues happening last year. These are like mainstream news, like FTX collapse. There is a stable coin called Terra USD that just went bust. There was a lot of collapse. Crypto had a bad name. There was a lot of issues, right? Are these business models sustainable? Like, do people know what they're doing? Seems like a lot of consumers lost money, conflicts of interest, risk management failures, all of that. So why are we here talking about crypto today? Well, I think first of all, the regulators took notice and they realized that crypto is not going to go away. There is real benefits to this technology. So what they need to do is actually come up with a framework that works. and for everyone to start participating. So globally, you'll see that it's really high on the regulatory agenda, whether you're in Hong Kong, other parts of Asia, Europe, Middle East, GCC. And I think I would just highlight these are some common threats. Policy objectives, obviously, from a regulator perspective, we want to make sure financially there's stability, the market, there's integrity, consumers are protected, but at the same time, we really want to embrace innovation and enhance competitiveness. So there's a lot of competition, between different countries where people want to drive their talent, like more talented people to come and live there, to come and work there, to enhance productivity. And I think, embracing crypto and digital assets is one of those key things. And obviously with this objective, there's a lot of challenges. How do you regulate something that's so new? I mean, do we try to use the existing regulations and retrofit it to crypto? Do we classify as a new type of asset? Are we regulating technology, or are we regulating the financial products that people often use blockchain to do? So it's not easy at all. And I have a lot of respect for the regulators out there that have been going at it for a number of years, and will continue to go in this space. Have a lot of friends in this circle in Hong Kong, overseas, and we have regular dialogues. And they share a lot of pains as well. They're trying to really understand, break down the products that they see that young people are buying up, like DeFi products, GameFi products, and understand what they are. They're playing with a lot of these protocols themselves. And I have really seen the growth in the regulators' mindset as well. 1 year ago, when we spoke to people in government, in Hong Kong MA, in SFC, they were really beginning. And fast forward, this year, like when I go into the MA for my meetings, I was like, wow, you guys are really know what's going on. You're really on the pulse. When things happen in the crypto space, a lot of times it's on Twitter or what is X now, rebranded. And they're following those Twitter threads. They're really understanding the flow of the assets, like from one protocol to another protocol. How does a hack in DeFi affect the stability of another DeFi protocol? So a lot of growth here. I have to give credit to the regulators. And the main principle really is they're trying to break down, understand the activity itself, and then the risk associated with that activity, and then to have that regulation around that. So same activity, same risk, same regulation is what a lot of regulators are converging on in terms of their approach. They're trying to be technology agnostic. So the fact that you have to look at the activity and the associated risk means it doesn't matter if you're offering this on a piece of paper versus if you offer it on the internet versus if you offer it on a blockchain protocol in your cell phone, on your mobile phone, in a wallet. It's the activity that matters. Are you actually offering a financial product? If you are, we're going to regulate you like a financial product. If you're offering it not as any financial product, it's purely a profile picture. It's like a NFT. It's like a monkey picture, right? Then we're not going to regulate you in the same way that we regulate financial product. Oh, there we go. So this is a very complicated slide, but I think I'll just give you a general context on, everyone is converging on these principles, these objectives, but in fact, the outcome is quite different. So what we're seeing in the US in particular is there's just a lot of confusion. In the US, the Securities Exchange Commission, which is the securities regulator, and the CFTC, which is the commodities derivative regulator, they're basically fighting for their own turf. So there's a huge confusion around who is the regulator for crypto activities. And during this whole time, they're basically bringing enforcement action against major players, small players. So you'll see on the news that they brought actions against Coinbase, Binance, Ripple, OKDAO. Some of these you've heard of, some of these you've not heard of, but it's been a raft of enforcement actions. And what do I derive from that? I don't derive a set of coherent legal principles as of yet. And that is not only my confusion, because when I talk to my peers in the crypto legal circle, they're equally confused. So you see a lot of advocates in this area saying that SEC needs to provide more clarity, more guidance, more coherency in terms of how they are looking at the subject matter. Some people say it's not even an SEC problem, it's a Congress problem. US need to start making some laws, some good laws. Like look at what they've done in the GCC, look at what they've done in Europe, right? So there's a huge amount of uncertainty, and it has an impact on the activity of innovation, meaning that a lot of projects that we're building in the US are now quieting down. People are genuinely quite worried. You're building something, are you going to get arrested? Are you going to get sued? We don't know. So that's the US. In Europe, we do see better frameworks coming out. So in the UK, they have come out with a comprehensive crypto assets regulatory framework. And it's basically going to take place in phases. So there was many years of consultation. And basically, the PRA, the FCA are all coming out to participate in this regulatory framework. And it will basically be across the board in financial services, impacting issuance of crypto assets, trading of crypto assets, intermediation, custody, lending, everything. It will also encompass stablecoins as well. In the EU, that was very groundbreaking as well, as we have MiCA, Markets in Crypto Assets Regulations, so across the European Union. That itself has this attractive passporting, of course. So a lot of people are looking at picking a good place in EU to settle down and take advantage of that passporting throughout the rest of the Union. And again, this is something that will come into force in 2024. Now, moving back to where we are in Asia, I'll spend a little bit more time talking about Hong Kong and Singapore, because I truly believe that there's a lot of action here in Asia, and we're in some ways leading the global agenda in crypto as well. So I will leave the GCC because we just heard from the expert there. Okay, so what's happening in Hong Kong? This is meant to just visually, although it's not proportionate, tell you that just so many things have been happening since October 2022. So the first two boxes on the left were sort of back in 2019 and 2020. So Hong Kong was actually quite early. In 2019, the SFC came out and said, okay, well, for virtual asset trading, you guys can go and apply for a Type 1, Type 7 SFC license, okay? So that came out in November in 2019, and then a year later, they actually granted the first license to OSL. So a lot of people know OSL in Hong Kong. They were one of the first exchanges to actually offer virtual assets. At that time, it was only professional investors. So meaning, if you satisfy certain requirements as a high net worth or an institution. Otherwise, crypto was not really permitted in Hong Kong. Now, fast forward a few years, right? A lot has happened. And Hong Kong didn't really have a very clear stance, I would say, between the years of 21 to even earlier parts of 2022. Now, in 2022, I would say that was a watershed moment. The government, through the Financial Services and Treasury Bureau, actually issued a policy statement on the development of digital asset. That was amazing because actually in 2022, I spent a lot of time talking to our friends in government and explaining to them, you guys, we have to do something. Hong Kong is losing its competitive edge. Look at Singapore. All the big platforms have gone to Singapore because they're so much more friendly. That the regulators are really ready to basically engage and have that discussion. Whereas it seemed like the Hong Kong regulators were a bit aloof. So we have friends, and I won't name them, who basically then asked me, well, Patricia, can you share the podcast that you like? How do you get up to speed with what's going on? And I said, well, I listen to a lot of podcasts. I read a lot. I can definitely share that with you. I go to a lot of conferences, and that was, mind you, before Hong Kong actually opened up for COVID-19. So I said, I went to Paris and I went to EthCC, which is an Ethereum conference. I got COVID. I almost died, but I think it's still worth it to go there and see the world. And so I think that not just me, but people like me have really started to shape and influence that change in stance with the government to say, hey, maybe this is something we should look into. So really, really happy to see that watershed moment in October. And it really set the tone for everything that is to come. From then on, I think it was so much easier to make appointments, to engage with regulators, to share business plans, and to actually invite them, right, to have a view, to have an opinion about what things are being built, whether we should set in Hong Kong, whether we should bring the teams from international to Hong Kong, right? People like Invest Hong Kong became very, very busy because a number of international projects started wanting to explore the possibility of being based out here as well. A couple other things on the policy side is in February of this year, don't know if you guys noticed, but in the financial budget, the financial secretary actually set aside 50 million Hong Kong dollars, which is around 6 million US-ish, just designated for the Web3 industry. And they formally formed a Web3 task force with representatives from both government and industry. So a lot of our good friends are on that task force, and I think they're doing pretty well. We're seeing them, very active in industry events. Now, with that really comes all of this here, this cluster that you see. So it's almost a very aggressive sort of regulatory, clarity coming through, right? In February, the Hong Kong Monetary Authority announced that there will be a stablecoins licensing regime, meaning that, basically you can issue a Hong Kong dollar-linked stablecoin, and the regulators will give you a license for doing so. So you'll be legitimately recognized. There will be prudential and licensing compliance requirements around that, so everybody feels safe to actually use your stablecoin. In June, the VASP, or what we call Virtual Asset Service Provider regime, also comes into effect. So that's the works of the Securities and Futures Commission. So again, this is for all the crypto trading platforms now can actually apply for what we call the VASP license. So very similar to the VAR regime, the set of prudential compliance requirements. You need to have sufficient capital for 1 year running. Before you actually get the license, you have to have all the securities reviews, independent assessment, all that. So it's very gold standard type of regulatory regime. And to the point about bank account, that is also an issue. And what the regulators did is actually spearheaded the industry to open bank accounts. So they set up a roundtable. This was on Bloomberg. So the Hong Kong Monetary Authority basically called roundtable meetings where they sat the biggest banks in Hong Kong, like HSBC, Standard Chartered, Bank of China, and they called the crypto exchanges like OSL, Hashkey, and a few that are applying for the license now, and said, hey, you guys need to talk. Okay, this is a serious issue here. We have this regime, we want it to work, but we need you guys to start opening bank accounts. So people that want to trade crypto can actually buy crypto with their fiat money, and you can process them, and these exchanges can thrive in their business. There was a couple of these roundtable meetings. Some of our friends working in the big banks, honestly, were quite scared. Their feedback was, I don't know what to say in these meetings. And they had the script written out. They got their compliance team to clear the script, and they were just hanging on to it and saying things. But anecdotal aside, I think it's really positive development for everyone to just start talking to each other. They're not scary. You guys have to work together. So fast forward a few months, we do have a number of banks now opening bank accounts for these crypto exchanges. So the backlog of these applications is starting to clear. SFC in August of this year actually uplifted the OSL and Hashkey license, which was originally limited to professional investors. Now they uplifted that restriction so they can also offer virtual asset trading to retail investors. In September, just earlier, a few days earlier, SIBOR Bank also received an approval in principle from the SFC, basically to deal in virtual asset products. So I'm seeing a lot of backlogs being cleared, and it's very clear that in the next few months we're going to see a lot more players getting their formal license through the door now. So the funnest part for me also always is not to talk about what happened, it's to talk about what's to come. And I just wanted to take another maybe 5 minutes to share some thoughts, and happy to hear anyone's view as well. it's like, what should we expect? We had a lot of mess coming out of last year, and then all these regulators are piling in. Sounds like a lot of activities in Hong Kong, in Singapore. Oh, by the way, just quickly on Singapore. Singapore also has their regulations around virtual asset. Their regime is actually under the Payment Services Act. So they have chosen a slightly different regulatory approach. Instead of having a set of virtual asset regulation, they have sort of used their existing payment services regulatory framework to put in the virtual asset guys. They have started granting licenses to crypto exchanges. They took a kind of small break when FTX and a lot of platforms blew up, because those platforms had a lot of Singapore users, were basing themselves out of Hong Kong, out of Singapore, but they have resumed the activity of granting out licenses. Singapore has also announced that they will have a stablecoin framework, and they will allow basically Singapore reference stablecoins or any G10 currency linked stablecoins to be issued in Singapore, and they will grant out licenses for that. So there's definitely a bit of a competition between Hong Kong and Singapore, but they are definitely leading the pack in this space. So stablecoin up here, I think it's going to be a huge topic going into next year. You can see things are happening in the US too. PayPal recently announced their stablecoin in the US. So I think there's going to be a lot of race to launch, race to get licenses. And the use case for stablecoin is going to be really heavily developed in the next few months, both serving like more a crypto ecosystem and also the traditional finance. When we're talking about cross-border trades, payment and settlement, people are going to increasingly want to use stable coins as a medium. And I personally think that stable coins is going to be one of those things that is the catalyst for more people to start using crypto assets. A few other themes, CEX, it stands for centralized exchanges. So these are like the FTX of the world, the Binance of the world. These are crypto exchanges that are managed centrally by a team of people. So they're not all that different actually from a bank, like a very traditional bank managed by the same people. We saw a lot of issues in these centralized exchanges because they have what we call like vertically integrated business models. They were just doing everything. They were doing trading, they were taking customer assets, they were doing market making, they were doing custodian, like all in one room, bunch of young guys, a little, very, very cowboy in some of these teams. So what we're seeing is this model needs to break down into different elements. You need to have your client assets need to be segregated. You can't market make and trade at the same time, because when you can do the same, there's a moral hazard that you're gonna, front run your customers' trades, and they very oftentimes do that. So all of this have to be done in a better and sort of more, I would say, more regulated and more safe, with a lot of guardrails around how these centralized exchange operate going forward. I think as a result of that, if I have to make a prediction, I think there will be some market consolidation, because with all these compliance requirements, not everyone can afford it. For those of you that's worked in banking before, it's a huge compliance undertaking to fulfill all these rules. So I think you'll see a lot of the platforms that are very cowboy exit the market, but the ones that are very determined to stay, they will make it. They are the guys that are applying for licenses in multiple jurisdictions. So OKX, which I used to work for, is one of those big platforms. They are applying for multiple licenses in multiple jurisdictions, and they're here to stay. So contrast that to decentralized projects, which Scroll is one of these decentralized projects. So what are we doing? These guys are building through the cycle. I mean, it's a bear market right now in crypto. If you look at the price of Bitcoin now versus 2 years ago, massive difference, okay? So, but for decentralized projects, these people are very passionate. They are going to build, whether it's a bear market or a bull market. So we're building through the cycle. I see a lot of shift from builders in the US to builders in Asia, Middle East, and Europe. Actually, a lot of that reason is because of that really scary environment in the US, that uncertainty. So we see a lot of talent moving Asia and Middle East. I think there's a lot of investment into blockchain infrastructure. So these are not the fluffy projects that's trying to sell you a picture of a monkey for a lot of money, right? These are actually builders that are looking at layer 2 solutions, scalability solutions, interoperability solutions, security, data. These are all things that you need to run a blockchain. So that's very meaningful, and it's very fitting that people are building through a bear cycle, because there's a lot less noise about whether your project is very valuable and you're able to raise a lot of money. It's just about building something that has utility and has, actual use to it. Within the decentralized project space, like such as Scroll, there's a lot of focus also on governance. How do you build what we call DAO, decentralized, autonomous organization? This is a new type of governance structure, and also on tokenomics design. So I used to be a corporate development lead at WeLab, and I did a lot of fundraising. So I did 3 rounds of equity fundraising. And in the decentralized project space, people oftentimes use tokens to fundraise. And when you fundraise with tokens, a lot of it is about how do you design the tokenomics of it so that you incentivize investors, you incentivize users, you incentivize teams to keep building. So that it's a very different type of mentality and thinking around the fundraising exercise. And I think going forward, we're going to see very interesting things coming out of regulations on the DeFi space. How do you regulate something that is so decentralized? How do you regulate a project that doesn't even have share capital? So that is something that we're going to see a lot of. I think I'm expecting some papers from the FSB on DeFi regulations, and also IOSCO as well on DeFi regulations in the coming weeks and months. Lastly, it's about institutional adoption. So I think the reason why everyone is talking about crypto is because there's just a lot more mainstream interest now. A lot of banks, JP Morgan, and a lot of even like people like HSBC, right? Everybody is looking at how can they use blockchain to enhance their own business. It's not something that's going to go away. So they're looking at adoption, right? In the investment space, people want to put a little bit of their investment into maybe Bitcoin. So we see a lot of news about Bitcoin ETFs, about tokenized bonds, and even at the government level, people are talking about how do we use blockchain to enhance, like cross-government sort of trading. So CBDC is another topic that uses blockchain. I think another key buzzword that you'll hear a lot is enterprise blockchain. So this is really about all the different companies in the world that are adopting blockchain, but for their own enterprise usage. So we talk about permission chains, right? So blockchain is supposed to be public, permissionless. However, enterprises often want to gate the use of their blockchain. They want to put some permission around it or put some KYC around it so that it can suit their business model better. So this is another huge topic. And I think maybe Julia, you want to say a little bit about tokenization as well, because Hong Kong is certainly also leading the way in terms of making new rules on tokenization. And so that's basically what I want to share today with all of you. There's a lot of things happening. And I would love to hear your feedback, input, thoughts. This is my LinkedIn. I very often write about all the things that are happening in this space, including new regulations, including new enforcement cases that are coming out of the US, what makes sense, what doesn't make sense. So feel free to add me on LinkedIn and keep the conversation going. Thank you.
Thank you, Patricia. That was fantastic. So you'll be glad to know I'm not going to say anything much more now. So if you'd like to take a 5-minute break or so, we're going to move to a panel session where I will ask a few questions and everybody who's here with us this evening can ask whatever they like. Right, okay, well, I shall start off and I have loads of questions. So if you don't have any, I can keep going. So Patricia, there's a lot of regulatory enforcement and bad news, as you mentioned, surrounding crypto. The collapse of FTX and a number of other platforms. I know some people who were really great people were very badly hurt by that. So how do you think confidence can be restored? How are we going to move forward? Or is this a US issue?
I don't think it's a US issue. I think it's a global issue. I would say that crypto is only basically going into its early adult life. It was like a child before. So there was a lot of experimentation, there was a lot of innovation, and what very often happens is that during that phase, there weren't enough guardrails around how things were built, how things were run. Now, we learn our lessons. It's very unfortunate that some of these businesses grew so big and became so global in scale such that a lot of people got hurt. But I think how we restore confidence is exactly what people have been doing this whole year, which is really engaging with the regulators, talking about what are some of the frameworks that can work. Maybe we import some rules that we already have in the securities regulation, in banking regulations. Maybe we don't. It's always a discussion, and I think it's being flexible. It's also the regulators being flexible with their approach, and we figure it out. I think Hong Kong's doing a really great job because it's been doing this by consultation with the industry, so it allows the industry to give them feedback on things that work and things that don't work. And they're doing it by phases. They're not pushing everything out and saying, this is it, you either, it's my way or the highway. They're actually being very progressive. So I think it will take time. If you ask me, I think it will take at least maybe another year, 2 years for players to prove themselves, that they can operate in a regulated environment and for everyone to feel safe and secure. But we will get there.
I want to ask you, Patricia, are you serious? You really think the Hong Kong regulators have done a good job? I mean, they sat on the fence from like 2017 to very recently. And they still, in my view, don't completely know what's going on.
Well, first of all, I always take I guess I'm a very, I don't want to be harsh because I know how difficult their job is at the same time. Like, you're asking them to really learn a new industry and to try to encourage this industry to grow. I mean,
you've managed to learn it.
Yes. I recognize they have a really hard job, and also I think a lot of inactivity during those few years was actually a lot of figuring out or soul searching, from a larger, from a policy, from a macro perspective. Is this, where do we want to go? I mean, Hong Kong is part of China, so there's also that context to be more sensitive about, right? So I think the fact that Hong Kong managed to get to where it is, being part of China and being so open and inclusive on the digital asset agenda is really, it really exceeded my expectations. Now, I agree with you, Julia, like there's so much more work to be done. And I think this is where everyone in the room can contribute because, I think what we know, how we think about things, even criticism sometimes, we should bring it to them. We should just bring it to them and talk about it. This is the only way that we're gonna do this right.
Andrew.
Thank you. Can I have It's a sort of follow-up in a way. I think in response to the two splendid presentations, people now, whether they're in China, Hong Kong, or wherever, accept blockchain. We kept using blockchain separately, part of life. But from an investor's point of view, as opposed to somebody who wants to set up a platform, an ordinary investor's point of view, is it not the fact that there's a sort of self-fulfilling vicious circle here because of the uncertainty over regulation? We have a spectrum, we've seen over the last 3 or 4 years, a spectrum of attitudes from there should be no cryptocurrency at all, to we should adopt it as a national currency, to this is a libertarian concept and it should be outside the control of all governments. Now, given that range of views, all held by very powerful, wealthy, and intellectually quite impressive people, and a very fast-changing technology, it's very, very difficult, isn't it, for an investor to think, well, in 5 years, you said 2 years, in 5 years, this is maybe bad, but it's not going to be a high risk investment. And the part B of that question is, leaving aside the US, which is always a special case, and your fellow panelists talking about the GCC, if you were an investor in crypto, a humble investor, which of the areas now would you be thinking, yeah, that's where they're going to get the balance right? Or how do you hold position? I mean, this could be addressed to either panelists in 5 years' time. Thanks.
So I think I'll address the point about investment. Okay, so this is how I think about it, right? When we're thinking about investments in general, people, like if I put my investor hat on, why do you invest in something? It's because of the return that you're going to generate on that investment. Now, I think in the early days, we saw a lot of people invest in crypto, and they were getting these outsized returns for no reason, because a lot of people have said there's no fundamental to that investment. You know, it's not a company where they generate earnings and you can, figure out whether you should invest in them, whether it's a healthy business. It was just very conceptual. And these prices of these crypto assets were what we call in the crypto space, they were pumping massively. And then there was a lot of pump and dump schemes, obviously, because if you can generate excitement and you dump it, you make a lot of money, you go to run, right? So this is not going to work anymore, because for an asset class to be legitimate, to be sustainable, to grow, you have to have more stable type of prices, and people need to understand what is driving the underlying value of that asset. So I think what's happening now is that regulators are coming in, they're regulating how this space, how projects are being offered, how these tokens are being offered, how crypto assets will be listed and traded on the exchange. And that is a very good thing, because by doing so, they actually inspire more confidence for investors to invest in this longer term. So they don't look at it as a short term, I have some insider news that this project, this coin is going to list tomorrow on Binance, and they will market make and will pump 1000x, and then I can just sell it. You don't need to do that anymore. You can actually read about this project, read about the fundamental utility of what this project is building, like a project like Scroll. And a lot of projects are increasingly more focused on defining their revenue model as well. So you start to see a convergence between what's happening in the crypto space and what's happening in the real world. I see all this as healthy developments, and this is the only way that the crypto asset class can basically grow and develop as an adult.
A quick follow-up, if I may. I asked also about the geography. You said, Tricia, you were pretty downbeat on the US.
Yes.
And you didn't mention mainland China at all, I don't think. Could I have your take on it?
Yeah, so I think mainland China has been pretty clear about cryptocurrency, and it's an outright prohibition. It's a ban. So I don't think the focus for their regulation is to have a regime to allow cryptocurrency or the trading of crypto. What they have come out to support is Web3. And I wrote about that on LinkedIn. It was a paper that was published by the Shanghai government, so not national level, but it has, I think people widely consider that it has national support, just given that it is from one of the largest municipality of China. But their Web3 concept is actually a much broader. It's not just about crypto, digital assets, also about augmented reality, AI, and all sorts of digital economy kind of concept. So I think that is something that China is wanting to be at the forefront of for many reasons, including political reasons. They cannot afford to fall behind the US or other, countries in this development.
Thanks, Andrew, and thank you very much. So I think, Patricia, it would be very interesting to hear from you. I think a lot of people have a lot of confusion about what exactly is Web3, because Hong Kong government keeps saying we're all in favour of Web3.
And actually, a lot of Web3 is not securities at all, is it? It's sort of outside of, to some extent, what we're talking about, depending on the analysis. So I'd be interested in hearing from you about that. And also, Scroll as a Web3 company, you know, how are you looking at the rest of the world, in North America? You know, are you looking at Africa and so on in terms of your rollout?
Thank you for the question, Julia. I don't know if I'm the right person to define Web3. It's because it's I think it's a pretty broad term, to be very honest. And people tend to talk about like Web 3.0, meaning as a contrast to Web 1.0 and Web 2.0. And generally people say, well, Web 2.0 is where like the Facebook of the world, where all the data that you have about yourself on the internet is owned by these big tech platforms, and they're monetizing on your data. So there's this movement into Web 3.0, which is where you own your own data, you own your own assets, and you take back control. So I think that's a general movement. But people also use Web 3 to describe a lot of really fun cultural things other than just trading Bitcoin and Ethereum and crypto. So NFT is a really big one. So non-fungible tokens. Very often it's in the form of a picture. So you'll see a lot of fun pictures, pictorial representation of art, digital representation of arts that get traded on chain.
Like yours, Patricia, is that an NFT?
That's actually an
avatar.
It's an AI generated picture. So I used one of the OpenAI integrated apps to create a digital picture of myself. But yes, I could mint that as an NFT and start trading it on chain theoretically. So there's a lot of fun stuff around that. So I mean, many of you might have heard of a company called Animoca Brands. It's also based out in Hong Kong. They're one of the leading, GameFi or Web3 companies also in Hong Kong. So a lot of what they do is nothing to do with crypto trading at all. It's just designing games for people to play on the blockchain. Your other question was
How you're looking at non-North America, and then rolling out Africa and so on with your Web3.
So I think I also want to share with this group one of the core ethos of Web3, the whole community, how it became a movement really was because of just giving access and control back to individuals. I think there was a lot of dissatisfaction with people that were in power, people that were controlling a lot of wealth around the world and just perpetuating that. And I felt that a lot of less privileged people wanted to take that power back to themselves, and that started a lot of people building open source technology and then sharing that with the whole community. People wanting to be anonymous, really protect their own data, and therefore Bitcoin became very big because it was a store of value and you could transfer value without disclosing who you were. And Scroll is also one of those projects that are very deep in this ethos, which is building for the community. So everything is open source, this technology, anyone can use it. If you have a GitHub account, you can see the repos, a lot of repos, all the code. We actually do code, peer review of the code as well. So if you are a random developer, you can feel free to read code and give me comments, point out where my bugs are. And the whole point is that the whole community try to improve this protocol, this project for everyone to use. And as respect to a lot of countries in Africa or Southeast Asia or South America, actually the take-up rate of these countries in crypto is really high. And there's a reason for that. A lot of countries have hyperinflation issues. And so for them to hold their local currency actually is not that much, it's not even helping them with their daily lives. So a lot of times they prefer to hold Bitcoin or stable coins or crypto. And so you'll see in those countries that the adoption of crypto is massive. And I think one of the co-founders of Scroll actually spent some time in Africa last month and actually reached out to the community. There was very enthusiastic builders, people wanting to run their own project. Again, you can make money with a computer, with your own knowledge. You didn't need a law degree or a university degree. This is what a lot of people find empowering about Web3. And I think it's particularly impactful in countries like the ones that you mentioned.
Yeah, Jonathan?
Well, I was going to ask also what is Web3, but now that you've given your answer, I realize I absolutely still don't understand what the hell you're talking about. And I can understand the idea that you're saying that Web2 is where you have the open web where big companies use your data for marketing and things like that. But can you go back and explain to a very old and technologically unsophisticated lawyer again what Web3 is, and again, what does your company do and how do you make money?
Okay, I will try my best. So Web2, we got what that is about. I think Web3 is really about decentralizing all of that. So basically disrupting the entire setup. So basically no one owns your data. You are not being monetized by any other company. So whatever you do, you may not even own it. You own your own data, okay? But whatever you do, you're sharing it with the community. That's the original idea of crypto, of Web3. Okay, so the Bitcoin, the person that started Bitcoin, nobody knows who he is. He's not Mark Zuckerberg. Okay, everybody knows who Mark Zuckerberg is because he started Facebook, he became a billionaire. Okay, and he continues to run Facebook today. He's driving all the decisions. Bitcoin is a very decentralized program. Someone started it. Now it's managed by developers that are spread all around the world. They're anonymous. So just to give you a contrast of what Web2 and Web3 is, because very oftentimes when people have difficulty finding something, maybe it's understanding conceptually how it's like, the characteristics of that. So that's the first question. The second question you have is what does Scroll actually do and how do we make money? Okay, that's also a very good question. Okay, so there is a blockchain called Ethereum. Okay, it was invented or founded by a living person called Vitalik Buterin. He's a Russian Canadian. He's very smart. He's basically a computer engineer genius. So he decided to start his own what we call supercomputer. And it runs on a blockchain. So basically a lot of data is not stored in any data center centrally. It is stored in nodes, in decentralized computers. It could be your computer, it could be Julia's computer, it could be my computer. And basically this whole virtual machine, this whole supercomputer, this invention has now become this massive community globally. A lot of people use the Ethereum blockchain to store their data, to run their transactions. And Ethereum also has a token called Ether token. So sometimes when people talk about Ethereum, they're talking about the token, which you can buy online for, I think today's dollar is like 1,600, something around there, US dollar for one Ether token. Okay. So you can trade in this thing and you can invest in it if you want to keep some of your investment in this crypto world. Now, because Ethereum has become this huge community globally, a lot of people use it, a lot of people build their projects on it, meaning they store data, they build a game on it that people can play, or they actually transact, they can actually trade derivatives or all kinds of financial transactions using the Ethereum blockchain. The Ethereum blockchain has a problem. It's too slow. It's a network of computers, right? So you have to process things, and the power of this computer is limited because there's just too much traffic. So what Scroll does is it's trying to develop a scalability solution to solve this problem. So that it wants to help this Ethereum blockchain be more scalable, so more people can use it, but without clogging up the speed. Okay, so that's what Scroll does. Now, how does it make money? Essentially, the revenue model is they're also trying to sell block space. So how you actually transact on a block is every time you do a transaction, you need to verify all the data, prove that it is correct by many different network computers, and then you establish that as a source of truth. Does this happen? We call it a state change. You create a block and you attach it onto the blockchain. Now, so Scroll also does that, but it helps Ethereum do it faster by essentially think of it as building like a layer 2 or like a highway on top of a congested road. So the revenue model is, I will charge you for using this highway because it's faster. And you'd rather use this highway because it's faster.
Or maybe it's an underpass, perhaps.
It could be an underpass. But in the crypto native space, we actually call it layer 2. So it's a very widely used term. It's called layer 2 rollup solution to scale Ethereum. And that's basically, in a nutshell, what Scroll does. And Scroll is not the only project. It is one of the most committed and I would say well-known projects on Ethereum scalability. Around the world, there are probably around 3 or 4 that are at this level. And so it's very much, think of it as like an infrastructure project. It's creating a highway.
Yeah, on a digital highway. Yeah, and it's amazing that Hong Kong has this actually. Yeah, it really is, I think, the leading scale up in Hong Kong.
And who are your customers?
So my customers are all the people that want to use the Ethereum blockchain. So these are people that are, a lot of them are computer developers, software engineers. So these are the people that they want to build something using the Ethereum blockchain. So for example, I want to build a game. I want to build a blockchain game that people can play. And I want to use Ethereum because a lot of people use Ethereum. This is where I have a community already. I have a lot of potential people that will play just because they're part of the community. Now, when I build on Ethereum, it's too slow. It's too expensive. So why don't I build on the Scroll network so that I can use this highway? People will still come to play my game because I'm attached to Ethereum, but I get a faster access, faster pass. So a lot of them are actually developers, not really, not really like your moms and pops or your everyday user. So where Web3 wants to be is, today when you use the internet, you just use the internet. You just connect, you don't even realize the underlying infrastructure, what it is, right? I feel like part of the difficulty is we're laboring over all this infrastructure, all this technology, because it's at such an early stage. So in the future, when this technology has become more mature, you should just be using blockchain to do your banking, to do your social layer. Like you're not using Facebook anymore, you're probably using another blockchain social media where you own your own data instead of Facebook owning your data. You're doing your shopping on blockchain, you're doing your investments on blockchain, everything. Like your banking, maybe even your apartment, your proof of ownership of your apartment will be on the blockchain without you even realizing you're using the blockchain. This is where Web3 wants to be in the future.
So we just, I can add a couple more.
That's the best exposition you're ever going to get, Jonathan. So listen, thank you so much, everybody. I think we've talked for a very long time now. And I just wanted to ask each of our speakers to wrap up. What do you think we should be talking about that we're not talking about? And Jihan, maybe you've already said this with your face-to-face communication and so on, but perhaps you'd like to see what you'd like to add. What should we be talking about that we're not talking about in this space?
Ladies first.
I think it's, for me, I sometimes think about where the world is going, with Web3, with crypto, with digital asset. Like, it started originally to give power back to the people, to be empowering, to allow people to, be able to make their own, right? To own their own data, to make their own money. But then sometimes I kind of look at this last cycle where actually a lot of people just made a lot of money and just became mad. Like, it kind of defeated the original purpose of it being a very community-driven sort of world. And the other thing I sometimes think about is AI, right? Because we're increasingly in a digital world where, a lot of people hide behind their pseudonymous personalities or names, and they could be coding. But at the same time, do I know if I'm dealing with a real person? Do I know if I'm interacting with a real person and all the dangers that comes with that? Especially in Web3 where it's very engineer or very software engineer, kind of heavy kind of world, right? Like that's something that AI can do very, very well. I mean, I think pretty soon, like the AIs can write all the programming, can like find out, detect all the bugs, can probably hack into a lot of protocols, take people's monies away. Like how do we regulate around that?
No.
You know, that's another agenda, right? I feel like we're just at the start of a new dawn, and that's why I give a lot of breaks to my regulators, because I think they have a lot of hard things to be on their plate.
We were so privileged to have these great speakers, so thank you so much. Thank you very, very much. And thanks everybody. And if you would like to have another drink, we're open for a while, so just hang around for as long as you like. Thanks so much,
you very
guys.
much.
Thank you.
A lot to think about.
Welcome to the Commonwealth Chamber of Commerce, where your business journey is our priority. Today, we are excited to introduce you to our exclusive membership benefits that cater to a range of professionals and companies. We offer 4 distinct membership categories. Enjoy all the perks absolutely free. You will gain access to exclusive rates for our exciting chamber events held annually, giving you ample networking opportunities. Plus, seize the chance to engage with us by joining our dynamic chamber committees and vibrant social clubs. For just 2,000 Hong Kong dollars per annum, you will unlock exclusive event rates and even have a shot at public speaking at our prestigious events. Dive deeper into the business community by joining our chamber committees and social clubs, opening doors to unparalleled connections. Priced at only 2,000 Hong Kong dollars per annum, you will receive exclusive event rates just like our other members. But that's not all. Enjoy a free marketing platform through our membership benefits program. Your company's spotlight will shine brightly in our chamber news and on our website. And don't miss out on opportunities to contribute to our chamber committees and social clubs. Our comprehensive package at 5,000 Hong Kong dollars per annum brings you exclusive event rates, making your presence known at our care events. Experience unmatched exposure through our membership benefits program, chamber news, and website. Showcase your expertise by speaking at our events and become an integral part of our chamber committees and social clubs. No matter your business size or aspirations, the Commonwealth Chamber of Commerce is your gateway to unparalleled opportunities. Join us today, and together, let's build a stronger business future.